Hello everyone, I'm Jitin Makkar, Senior Vice President and Head Credit Policy at ICRA. I'm here to speak of a report published by ICRA recently titled Risks and Reflections, the Year in Review 2022. This report lays down the key credit themes that drove ICRA's rating actions in 2022. We know that last year was a year when Indian corporates faced a range of credit challenges and also had their fair share of opportunities as global events and macroeconomic factors influenced credit risk. To rewind, the year had begun with concerns over a potential third wave of the pandemic in India, which was further complicated by the onset of the military conflict between Russia and Ukraine. These events, as we know, disrupted supply chains and contributed to inflationary pressures in the Indian economy, leading to rising borrowing costs as central banks in India and across the world implemented policy rate hikes and drew out surplus liquidity. Additionally, the depreciation of the rupee against the US dollar exacerbated inflationary pressures on commodity prices. ICRA's portfolio had certain entities on whom the impact of the above challenges was palpably direct. As an example, the rating of a pharmaceuticals formulations producer that derived 80% of its revenues from exports to Russia was downgraded by ICRA in view of the expected adverse impact on demand, logistics challenges, and the elongated receivable cycle that was likely to create cash flow pressures following the removal of select Russian banks from the SWIFT network. In contrast, despite having some direct exposure to Russia and Ukraine, the ratings of several other entities and sectors remained unaffected due to certain mitigating circumstances and the materiality factors. As an example, while the global developments had a material impact on fertilizer prices and supplies and were credit negative for the fertilizer entities, if looked at in isolation, the ratings of fertilizer companies remained unaffected because of expected support from the Government of India by way of additional subsidy allocation. Speaking of interest rates, it is natural to expect hardening interest rates to be problematic for entities that are highly leveraged, have floating rate borrowings, and have limited pricing power. For the toll roads in ICRA's portfolio, the adverse impact of rising interest rates was expected to be largely mitigated by the sharp increase in toll rates in view of their formula-based linkage with the wholesale price index, which is currently, as we know, ruling at multi-year highs. Also, the road annuity assets in the portfolio were seen to either have fixed rate borrowings or their existing ratings had the tolerance to withstand the impact of a certain level of interest rate hikes. As per ICRA's estimates, the overall impact of a 200 basis points increase in interest rates on the cumulative DSCR of annuity assets was estimated to be around 5 basis points, low enough not to trigger rating changes. In 2023, however, as the full impact of the higher interest rates gets transmitted for the MCLR-linked loans, sectors or entities that face demand pressures or have limited pricing power are likely to face greater pressure on their credit profiles. As for banks, even as deposit repricing could put pressure on their interest spreads, their earnings profile should draw support from expected healthy credit growth. In 2022, ICRA reviewed 131 entities in its portfolio whose net unhedged foreign currency exposure on account of exports, imports, or foreign currency borrowings was more than their operating profits, implying a reasonably high exposure to currency risks. However, a large majority of these entities were seen to have the mitigation levers in the form of currency hedging, adequate liquidity buffers or parent support, or the ability to pass on cost increases to their customers. Some of the entities were also seen to have substituted their imports with domestic purchases. 3 entities, however, were seen not to possess the currency risk mitigation levers and faced credit pressures on other counts as well, which led to negative rating actions on them by ICRA during the year. Speaking of winners now, on the positive side, the product realizations of several entities in commodity-oriented sectors such as metals, oil and gas, chemicals, and paper benefited from the import parity pricing mechanism against the backdrop of manageable costs. Now, cost inflation was a prominent theme of the year. There was substantial gas price inflation that played spoilsport and created supply-side concerns for entities in select sectors like ceramic tiles and gas-based power plants. ICRA downgraded a few entities in both these sectors last year. However, there was no rating impact on gas utilities, that is the LNG regasification terminals or pipeline owners or city gas distribution companies because of their ability to pass on the rise in gas prices to consumers, besides their balance sheet strengths. In general, there were several rating downgrades during the year for entities that saw profitability pressures because of cost inflation and weak pricing power. These were entities mostly in sectors where competition is intense and product segments are commoditized. Notwithstanding the credit challenges, the overall credit quality of India Inc. continued to improve in 2022. Certain sectors such as real estate, engineering, and construction saw growth in demand, while the hospitality, fashion retail, and film exhibition sectors recovered from the deleterious impacts of the pandemic. In the road sector, several annuity based and hybrid annuity based projects were upgraded, driven by reasons including a reduction in execution and funding risks following project completion and timely commencement of the semi annual annuity payments from the concession authority, assuaging revenue risks. Banks and non banking financial institutions also experienced calmer conditions, not seen in a long time. The report that I referred to at the beginning of this podcast expands on what I've spoken about and captures more specific data on the key credit themes that drove ICRA's rating actions in 2022. That report also captures ICRA's latest outlook on various sectors while highlighting how the outlook on certain sectors progressed during the year. Do give it a read. Thank you for listening, and we wish you a fulfilling year. Stay tuned for the upcoming podcasts from ICRA. Thank you.